Palantir Technologies has recently reported a strong set of financial results with remarkable growth in both revenue and commercial traction, driven by its AI-powered data analytics solutions. In this video, I'm going to talk about the incredible and somewhat controversial valuation of Palantir, which has just crossed a staggering $250 billion mark. That's right. After a 50% surge in stock value just this January, Palantir's stock has skyrocketed over 1,600% in the last 2 years alone. This begs the question, is Palantir in a bubble? First, let's talk numbers. So currently, Palantir has a price to earnings ratio of 600 and a price to sales ratio of 88. Now, these figures are extraordinary in the history of all major companies. To put this in perspective, companies like Apple, Tesla, Amazon, and Microsoft never approached these valuations when they were at similar market cap levels. But Palantir is projecting revenue of about $3.7 billion for 2025. Last year, their net profit margin was 16%, which could potentially rise to 20%. So this would give them a net income of roughly $0.7 billion. Now, compare that to Apple in 2011, which had a revenue of $108 billion and a net income of $26 billion. Or compare to Tesla in 2020, which had a revenue of $32 billion and a small profit when it first hit $250 billion. Now, what's fascinating and a bit alarming is that to justify Palantir's current stock price, they would need to maintain an extraordinary growth rate of 60% per year for the next 10 years in a row. However, it's clear that investors seem to be overlooking these traditional metrics, focusing instead on momentum and possibly the hype surrounding AI tech. And let's touch on something interesting, Palantir's stock options and stock appreciation rights, or SSARs. These incentives are linked to the company's stock price performance and have led to significant cash payouts for some employees as the stock price has surged. Interestingly, a portion of Palantir's income does come from interest on cash reserves, which raises questions about the sustainability of their profit model. And if you check out Palantir's price chart, you'll see a huge jump in price following the Q3 earnings report. From the low of $63 during the third week of January, price has surged by 83% to the peak last week. And right now, the angular price trajectory is very steep, indicating that this surge may be market hype. And a trend line shows price did pull away during November and December before coming back to test the uptrend during January. Now, I was actually bearish on Palantir back in January based on that price action. Boy, was I wrong. So if price comes back to test the current trend line, it could retrace to the $85 level created by the peak in December. So what does all this mean? While Palantir is undoubtedly a strong company providing valuable services, its current valuation is historically unprecedented, and investors should be very cautious about buying into the company right now. If you enjoyed my analysis, don't forget to subscribe to the channel. Let me know your thoughts on Palantir's valuation in the comments below. See you next time.